Hello traders, Gary Wagner here, about 10:15 in Honolulu, 4:15 in New York. June 22nd, it is Monday, and this is Trending Markets. We don't have a real strong trend today, I'll tell you that. We're looking very, very strongly at the euro and the dollar. My belief is that we would see some weakness in the euro, some strength in the dollar. We certainly were not getting all of that this morning. However, when we look at our current price, we do have the euro in essence unchanged on the day, but currently trading a little bit lower at 113.39. That's off of a low of 113.12, and the high today though 114.10. So we have hit a high, we have come down off of that high, and that of course is because we are just ending some talks over in the EU between the IMF, EU, as well as the Greek government about their debt resolution. We are seeing a return in terms of dollar strength today, currently trading up about 26 points or 0.28%, 94.35. When we take a look at the highs and the lows of the day, we're not that far off of the highs on the day. When we look at our high, it's 94.44 and we're sitting at 35. Low that it made though, 93.80. But as I said, we are currently looking at a stronger dollar on the day. First chart I want to take a look at today is our daily dollar index chart. We do have our MACD on the bottom. When we look at that, the way it's best characterized is we are in a defined downtrend. This is that channel that really describes the highs and the lows within that trend. However, this is a counter trend to an absolutely overall trend, which is up. So we're looking at an uptrend, which was started, June of last year, really propelled and valued the dollar tremendously. We now have seen our retracement. Our retracement has taken us to our first sets of lows. These are the lows that I believe absolutely will hold, which are just above, call it 92, 75, 74 in that area. We are currently trading above that at 94.36. So we certainly could see a little bit more downside activity. However, what we're waiting for is some genuine triggers or signals. And this would be based upon Fibonacci analysis and candlesticks in terms of timing, but a point to enter the dollar from the long side and also look to sell the euro dollar. Right now, though, we have not gotten any kind of concrete trigger or signal that tells us it is time to enter the market. But traders, we are getting the first hints of that, and I'll show you that on another daily chart. And I've done just that. I've pulled up a daily chart. It's still the dollar index, but here we get a much better idea of the count itself. This being a major third, and the major third came, of course, first time the market hit 100. When we look at our subcount, waves 3, waves 4, long wave 5, and that takes us into our corrective phase. Corrective phase is composed of an A, a B, and a termination or C. It comes into our projections right here, and now it is my belief, at least within the dollar, that we are back into a primary, or major, I should say, fifth wave, and that fifth wave is going to take the dollar higher. However, within the fifth wave, we're going to get a subcount. And the subcount that we're looking at right now is, even though we have an up wave, an impulse wave, or a motive phase, I should say, we've had our first part of that. This would be the component 1, 2, and so the question is, once we terminate that, we're going to get some sort of a 3, 4, and 5, and that, of course, would take the market higher and actually above this 100 if it unfolds in a true Elliott wave pattern, in which wave 5 concludes above the top of wave 3. Of course, if it goes 2 but not above it, it's called a truncated fifth wave. We'll have to see how that pans out. It's simply a matter at this point of timing and getting some indication that we've actually terminated this current corrective, call it a wave 2, within this larger wave 5. Now, in terms of our subcount, I've gone ahead and pulled up another daily chart, but in this chart, I've basically put a fib retracement, because here's what we're looking at. If in fact what we saw was an A, a B, termination of 4 with our fourth wave here and gone into a fifth, we get our impulse 1, but one of the golden rules in Elliott wave forecasting is that this wave 2 cannot continue below the onset or the start of this first primary wave up. If in fact it goes lower, this is all still part of wave one. When we look at the current retracement or these lows here, typically you're going to see that market retrace 50 to 61%. In this case, this is a 75% retracement. You can see that these lows have gone absolutely below that, and they have not really violated yet because they haven't gone into this low or the beginning of this wave one. And so for those reasons, this is a point that we want to look at for some sort of potential support in the market. Now, one of the candlestick patterns that I'm noticing, and that's what kind of brought this chart up in the first place, let's go ahead and blow this up and get rid of the basic fib retracement that we put in there so I can show you this candlestick type. And again, markets come down and we've got this candle right in here, and this candle once again is a hammer. Any way that you want to look at it, this is a good definition of a hammer. Small bodied, tail at least 2 to 3 times the length, occurring after a downtrend in the market. You get a pivotal doji, then you get this red candle, and there's actually a unique 3-river bottom pattern, which is very, very similar to this. There would be one more candlestick that would need to unfold, and that candlestick would be that on tomorrow's trading activity, you would in essence get a green candle. Let me try to put this in for us. You would get a green candle, as I said, something like this, with a higher high that would go over the highs of this. And these 4 candles, as I said, is a unique 3-river bottom. You don't see that often in the marketplace itself, but it is an exhaustion pattern, and it's highly documented as really showing you potential pivot points in the market. So I think that on that level, that's very important. In other words, I still believe that we want to be long the dollar and short the euro, as long as there was the belief of some sort of resolution with the debt crisis in Greece. Of course, what we saw was a euro that was really picking up some steam. My sense is that we're very close to that pivot point, but we want to time it right. So that's really what we're looking to enter in terms of trades this week in the markets. This has been Gary Wagner, wishing you as always good trading. Talk to you tomorrow. Bye-bye.